Hey, it's Ryan Skaggs of the Mortgage Minute. Today, we are going to talk about how higher interest rates could affect your purchasing power in 2022 with some live examples. So, check that out next. Hey there, it's the Mortgage Minute. My name is Ryan Skaggs. Thank you so much for tuning in. This channel is dedicated to everything mortgage, real estate, and interest rates. And we're going to dive into those interest rates. Unfortunately, yet again, with the report of slightly higher than the week prior. So we are now at the average 30-year fixed, according to Freddie Mac, at 3.56%. Check out the link below for a full chart over 1 year, 3 year, 10-year historical. Freddie Mac puts out a great survey on the average 30-year fix. That link is down in the description. While you're down there in the description checking out the link, hit that like button, hit that subscribe, hit that bell icon. I'd be forever grateful for the subscribe. And then that way you would be notified with that bell icon for the weekly videos that I'm putting out. So we're going to talk about purchasing power today specifically. So 1 year ago, and I've got it up to the side here, so forgive the eye contact for a second, but 2.79 1 year ago was our average 30-year fix. So I'll say that again, 2.79, the average 30-year fixed, roughly 1 year ago, according to Freddie Mac. Today, as I told you, 3.56. That's roughly 0.75% in 1 year. Now, as interest rates start to rise, I use the analogy that typically rates rise a lot like gas prices. They'll go up fast, and it's like blink of an eye. Holy cow, how did they get there? How is it $5 a gallon? That's nuts, right? And then they'll slowly bleed back down to reality. So with that said, that's what we're seeing right now. We're seeing rates rising fast. If they continue on this trend and we saw another 0.75 increase in percentage, maybe by the end of the year, then what does that look like? Right? That's what I want to describe to you. So today, if you're looking at a $500,000 home and rates rise by 0.75%, you would only be able to afford or want to afford or have the same payment as a property worth $473,000. So again, the numbers here is that basically that 0.75% that we've seen over the last year, if we continue to see that again in the next year, you're going to lose about $27,000 of purchase price. So if your top end was $500,000, your top end now is $475,000 max, right? So you lost at least $25,000 to $30,000 of purchasing power by those rising interest rates. So my tip for you is that if you were pre-approved or talked with a lender in 21, you need to re-engage in 22. Incredibly important to understand what that monthly payment is, what your cash to close is, and what you'd be qualified for in this increasing interest rate market. Again, purchasing power, the amount that you can actually go out and afford, be underwritten for, be qualified for, you have to apply to see what those would be. But my advice to you is re-engage. Do that first. It is looking like it's going to be an incredibly hot market in 22 with short inventory again. And that means you're going to have multiple offers on scenarios. You can't get out there and dip a toe in. You've got to get connected with a solid lender. And I'll leave you with this when I say that solid lender is not all lenders are created equal. If you think just going and getting a pre-approval letter, that's going to put you in the best position to win the property. I tell clients all the time is my job's not only to kind of get you pre-qualified, pre-approved, or put you through our fast lane approval, but also to be able to help you get the home, make calls to the list agents, have structure and programs that are going to fit your needs, not just here's an average 30-year fix, best of luck, go find the property, right? That's very difficult. So the different programs, obviously low rates are an incredibly important tool, but being able to have all those other aspects around how we present information, how we reach out to the list agent, our reputation in the local market. Look at your lender. What kind of reputation do they have when you put your pre-approval letter out there? Could they be a big bank and that might, have a sour taste in some of the list agents? Possibly, talk with your agent. That is incredibly important. Think of the big picture, not just, oh my gosh, I need a letter so I can go out there and shop, because you're going to be spinning your wheels in a really competitive market. So that's purchasing power in 2022. Leave your comments below. Happy to run any scenarios for you. Let me Tell me what you think we're going to see in the next 6 months to a year. Are we going to continue to see interest rates rise, or you think they're going to kind of stabilize where we're at today? So thanks so much for tuning in. We'll see each other again very, very soon. Be safe.